Investment fund. And as we all are aware, we have these traditional investment avenues. Traditionally, we all are used to invest in fixed income security, equity, mutual fund, derivative, real estate, commodity, money market instrument. So these are the traditional investment opportunity. And if we adjust the nominal rate of return, so that actually means nominal rate of return, if we adjust with the inflation number to arrive at the real rate of return, so probably we find the rate of return, particularly the real rate of return after adjustment of inflation number, that is a very low in traditional investment avenues. So actually high net individual or the institution who are maintaining a big corpus like a pension fund and all, they always search for alternate investment opportunity in order to get more return as compared to returns available on traditional investment avenues. So they actually are ready to take risk. So they are risk averse, or they are risk loving as compared to a traditional investor who are risk averse. So that is more risk they want to take actually for a longer duration as compared to traditional investment. But condition is they need to get more return. So that is their condition. And that is how actually unlocking opportunities and the need for alternative investment fund. So that is highlighted here. What is the purpose of making investment in alternate investment fund, or what exactly is the meaning of alternate investment fund? So alternate investment fund, they provide opportunity to diversify the investment portfolio beyond the traditional asset class like a stock and bond, and they provide exposure to wide range of alternative asset like private equity, hedge fund, real estate, commodity, and more. And AIF that can help manage a risk by spreading investment across different asset classes and the strategies. So as we all are aware, a mutual fund, so retail investor make their investment, a portfolio investor portfolio management services. So there also broadly it is retail investor. And since a retail investor, they make investment. So regulatory framework that is very strict. So a mutual fund, they need to follow certain regulatory condition. But in case of AIF, since these are knowledgeable investor, since they are actually high net individuals who are investing in alternate fund. So regulatory restrictions are there, but the degree of regulatory restriction, that's it's very low. So AIF can help to manage a risk by spreading investment across different asset classes and the strategy. So mutual fund, supposing means a fund manager of a mutual fund, he means can operate in the predetermined strategy. So he do not have actually the liberty to diversify the investment which are made in the mutual fund by the retail investor. Supposing like a mutual fund that is actually a debt mutual fund. So the fund manager of that particular mutual fund, he will not get liberty to make investment in the equity shares of a company. So that is actually the regulatory restriction which are put on the fund manager of a regulatory fund manager of a mutual fund, or the fund managers of portfolio of companies. So, but AIF, that restrictions are not there, more or less. And AIF can help manage risk by spreading investment across different asset class, and they can make use of different strategies also. So this diversification that can potentially reduce the impact of market volatility and economic downturn on the overall portfolio. So that is the advantage of making investment in AIF. And alternative investment, these are frequently have a potential for higher return compared to the traditional investment, as we already discussed. And AIF will allow access to investment opportunity that may generate attractive risk-adjusted return, particularly in sectors or strategy that are not easily accessible through the traditional investment vehicle. So as we already discussed about the mutual fund. So these strategy, specialized strategies that are not easily be, accessible through the traditional investment vehicle like a mutual fund and all. So AIF, these are managed by a professional fund manager who possess specialized knowledge and expertise. So income or revenue of the fund managers of the AIF, that is very high, and they are actually a very specialized knowledge. They purchase specialized knowledge, and there that is how actually they invest the funds of the investor in a very efficient manner, and they actually continuously monitor the returns on investment made by the fund, and in just a click of second, they actually diversify the fund or a portfolio if they sense that returns are not forthcoming or a prospect of a return from an investment that is very low. So that kind of flexibility that is not available at the fund managers of the traditional investment opportunity avenues. So AIF, these are managed by a professional fund manager who possess specialized knowledge and experience in a specific alternative asset class. An investor can benefit from their expertise as a fund manager conduct in-depth research and analysis to identify a promising investment opportunity. So that is about the need for investment in alternative investment fund. And if we go into more detail of that, so AIF typically have a longer investment horizon compared to traditional investment fund. And this longer term approach align well with certain alternative investment like private equity, real estate, which require time to generate return and may have limited the liquidity. So that is actually another characteristics of the AIF, and alternative investment that can provide hedge against inflation and market downturn. So what is the meaning of hedging? We all know about that. So hedge against alternative investment that can provide hedge against inflation and market downturn, and certain asset classes like a commodity or real estate that have historically shown resilience during a periods of economic uncertainty. As we are passing through the era of economic uncertainty at present, so that will offer a potential a protection to investor a portfolio. So that is the importance of the AIF, and AIF that can be structured to cater a specific investor preferences or the objective. So if you take one example, there are alternate investment fund which are focused exclusively on environmental, social, and governance, that is ESG principle, or impact investing, allowing investor to align their investment with their value. So there are many investors in the world who are not investing solely for returns. So they are actually their aim is to give back to the society. So they are actually more concerned about the ESG factor, environmental, social, and governance. And today's era of the environmental change, so we all are actually victim of that. So there are investors whose aim is to give back to the society, and they actually go by the principle or impact investing, allowing investor to align their investment with their value. So AIF, these are subject to regulatory framework that provide investor protection and transparency. A regulatory body set guideline. So in India, as we all are aware, SEBI is the regulatory body, Securities and Exchange Board of India. So regulatory body, they set guideline and monitor the alternate investment fund to ensure compliance, enhancing investor confidence in these investment vehicle. So that is brief about the AIF, alternate